Well, welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. As you can tell, I'm outside. This is not a green screen. I repeat, this is not a green screen. This is a toast to freedom. Let's crack it open. Oh, a Pirate Life. Sorry, I've got to show the beer. Pirate Life, South Coast Pale Ale. Exactly the only beer I could find with a coast on it. I think it's actually an Adelaide beer. Anything tastes good when you're free, including Pirate Life Brewing South Coast Pale Ale. It must be a nod to the Southwest Metro Pirates women's basketball team in Adelaide. Here's to you, the Pirates. Well, I'll just put the beer down. Here we are. Beers with Rich. Outside. Market timing. Let's talk market timing. Which everyone does. I mean, how many hours, hundreds of millions of hours are devoted to market. You know, what's the market going to do? No one gets it right. Sometimes they do, but when they have, they've got it wrong 1,000 times before. That's right. A broke clock is right twice a day. Well, in the markets, you can go broke before this happens. If you're trying to bet against the market, the big secret in the markets is that no one gets timing right. A strength that you have as a retail investor is your ability to hold on. Institutions that report quarterly don't have this ability. They have to dump stuff every time it looks, not too good to their trust holders. From my own experience, learning this has actually been quite confronting. It's been a hard road, but one that's also been very lucrative. On the one hand, I've sold stocks too early, when they disappointed. On the other, when I matured as a fine Pirate Life beer. On the other hand, when I sold too early, but on the other hand, I held on to ones that I, forgot about, and they almost forgot about. They ended up being some of my best investments. That's what investing is about, irons in the fire. That's what I love about it, because you literally, will not be able to predict which irons are going to fire at any one time. So, like one that we've been watching for a long time, that we covered last week. That's a similar stock that's been burning down. It's a small Aussie manufacturing story. It's been developing capabilities in the fast-growing aviation and drone markets. That's right, people. It's under the radar. But what are we looking for? What are we looking for in these sort of hidden gems? We're looking for cash flow. And we're looking for, probably even more important than that, is good management and intellectual property. IP can never be underestimated. Another consideration is the entrepreneurial X factor, which, we often like companies that are founder-led, which coincidentally this week is this week's new stock. So this kind of philosophy has led to 10 Baggers, City Chic Collective, Nick Scali, Macquarie Telecom, Pilbara Minerals, Collins Foods, even Evolution Mining. These all went through difficult periods where the market lost interest. But like they're blooming at some point, and when they bloom, they can make a lot more money than you can lose. Losses are 100%, winnings are infinite. So the stocks I'd like to talk about now, just quickly, that fit that kind of category in recent times: Pacific Current, which owns fund managers, and Superloop, an infrastructure owner in Asia. Both have been frustrating for very different reasons. But both, we held our nerve and we held on to our investment thesis. As we observed in September, what I was saying before, the losses that they're experiencing at Pacific Current were insignificant compared to the potential returns they could make if it goes right. Well, less than 2 months later, guess what? A 5% investment in GQG, which is floating this month. Some of you might have received a prospectus. This $3 million invested 5 years ago is now going to be worth around $300 million. That's the kind of return we're talking about. So Pacific Current is off to the races. We've long recognised Superloop as having a great franchise, high quality assets, with network infrastructure around Asia. Took new management to shape things up, realising some of that potential through a $140 million sale of their Hong Kong assets and part of their Singapore assets. Basically, this represents a quarter of its value. So, bang, they've got some real cash coming through. On top of this, they made a great acquisition in the largest independent ISP, internet service provider in Australia, to fill their fibre capacity. So this is paying off now with a 25% price rise. Let's see how far it can go. Go Superloop! Look, I admit, sometimes you can get lucky. All of a sudden, Senex Energy, with the great code SXY, up about 35% in a few months since we tipped it. Catching a bid happens more often than you think in the small cap world. 1 in 5 of our, couple of 300 companies that we've covered, has been bid for in the past 10 years. So in our analysis, we look at a company's industry positioning. Senex is really well positioned. It's got massive production growth forecast, with production forecast to triple in the next few years. On top of that, East Coast gas prices are climbing as supply tightens. These are some of the elements you deal with as an investor. You just have to cope. But that's what South Korea's Posco like. That's what we like. That's why they're bidding for it. That's why it's gone above the bid price. Sometimes it's about timing. Other time, it's about being in the right place at the right time. With a little luck, as Paul McCartney's saying, baby, you've got to be in it to win it. That's the deal. Let's have another toast to our friends at the Pirate Life people, Adelaide, South Coast. What's coming up? Sub picks are gaining a great deal of traction. We've looked at 30 in the past week. This week we focus on industrials, including medtech stocks, software as a service companies. Next week we're focusing on small cap miners. It's going to be big. Be a part of it. Here's to freedom. It's great being free. I hope you're enjoying your freedom. Richard Hemming signing off. Under the Radar Report.